Good morning, everyone. Welcome to this update for global stocks and commodities for the 3rd of March. Not a lot to report this week. Not much has changed. The US market was up again, the ninth week out of 10, up slightly, remains overbought, but certainly the trend remains upwards, although it's starting to certainly wane a little bit now. And the sentiment certainly has changed enormously. And it would appear all the things that everybody was really fearful about in the last quarter of last year is just really subsiding away. And people are expecting that we're going to see some sort of negotiated resolution on the trade dispute. And of course, the Fed has completely capitulated, so no one's worried about that anymore. And we've only just got some things like Brexit and slowing European economy to be concerned about. So that's where we're at the moment. The trends remain in place. There's really very little to comment on from last week. As I said, the things that were out there that everyone was worried about, some of them are certainly still there, but there's less and less concern about them. Portfolio Analyst last week, I introduced a local energy stock that I think over the next 1 to 2 years has tremendous upside and would appear very low risk upside as well. So that looks to be an extremely attractive reward for risk alternative. And I also covered a review of quite a lot of strong conviction stocks that I'd put forward in Portfolio Analyst over the last year or so. Most of them have done fairly well. A few of them haven't, which is really more the microcaps that are really suffering from a liquidity drought at the moment. But generally they've done pretty well. So American stocks this week, the index was up 0.4%. Not a lot, but at least it did bounce a little. And as I said, 9 of the last 10 weeks the market has gone higher, and it remains overbought. It's been overbought for some time. But this is not a rally or a rebound that is based around the FANG stocks or a small number of really large stocks. This is across the board. There's a very high degree of market breadth behind this rebound. So, that's a real positive. Markets hate uncertainties, and what we had in the last quarter of last year was a great deal of uncertainty, and certainly comments from the Fed didn't help, and that was the thing that really shook the market when the Fed said rates were a long way from being normal, and that their balance sheet reduction program also had a long way to go. Now, of course, both of those things were taken off the table, and that's when the market turned around. The problems are still there. China's economy is still challenged. Europe's economy is more than challenged. Brexit just limps along. Japan has had a recessionary month or quarter. So the problems are certainly still there. But the uncertainties have largely disappeared. I mean, people expect that there'll be some sort of negotiated outcome in the trade war with China that is going to be, far, far less than what was previously imagined. So, everyone's just sort of really calmed down about what's out there. So I think the most likely market advance from here is that we get a grinding, slow uptrend that's punctuated by the odd spike down that's either manufactured or manufactured by the computer algorithms, or there's some sort of news event that has an impact. Now the US dollar finished flat across the week, and the 10-year Treasury yield bounced back a little bit to 2.75. So let's jump in and take a look at the American market. So you can see incredibly sharp decline and then an incredibly sharp rebound. Haven't quite made it back above these November highs yet. We need just a little more. 28.15 is that resistance level. and we closed at 28.04. But you can see there's just been the odd day, 2 days down at the most, and then the market has gone back up again. So the only conclusion that one could make is that the moved any little spikes down are likely to be quite mild and fairly brief, unless of course there's some sort of news event. If Trump decides that he will change his stance on something that upsets the market, but at the moment the path of least resistance remains certainly to the upside. And if we look at the other indices, the Nasdaq not quite back to its October highs, but certainly looking fairly strong, and also the small caps. So if we look at the Russell 2000, you can see it's basically back to its October, November highs as well. So certainly strength there in small caps. US dollar, we went down, we rebounded, just finished down a couple of ticks. Just let me look at the Australian dollar. So we are still trending in this, or we're still trading in this range between 70 and 73.5, but we've certainly got a bit of a downward bias to the recent market action. I'll talk more about that in a minute. So just while I'm here, let's look at the Australian market. And the ASX 200 continues to move higher. We did have a down day on Tuesday, but overall for the week we made some gains. And the Australian market, similar to the US, is also in technical overbought territory. So our dollar down to 70.8. And look, the data coming through on the Australian market continues to deteriorate. It really is not a very pretty outlook at the moment. It's very hard to find positive signals for the Australian economy. And I'm seeing more and more analysts now, the ones that were saying, no, we definitely, the next move would be up. We're now seeing those analysts shift their position a little bit to either neutral or in fact supporting a rate cut. The ASX 200 up by 36 points for the week, and the Australian market remains a very highly stock-specific market. There really aren't any real themes. I guess the banks sort of tend to trade along with each other, but that would be about all. Other than that, it's very, very stock specific. There's no general sector trends. And we saw in the reporting season that there were highly variable results. There were companies that really surprised the market to the upside, and there were companies that certainly disappointed. And the reaction in the market was powerful in both directions. We saw share prices absolutely belted when stocks missed at all, and we saw some amazing jumps in price, 30% plus on results that exceeded expectations, and then the stocks after that initial day then continued to actually go up further from there. So some amazingly diverse results in the Australian market. Now turning to precious metals. Gold sharply lower. We got a bit overbought. I thought there'd be a bit of a pullback, and it seems that whenever gold is going to pull back, it doesn't do it by halves. And we saw a very sharp downward week, down $35, and we're back down under 1,300. But look, when you look at the chart, it's not unusual or to be expected. The gold price is sitting on some short-term support at the moment, and then the next support is 1276. So at this stage, I'm probably expecting a little bit more to the downside in gold. And precious metal stocks, GDX was down a little bit, but I thought it held up reasonably okay compared to what happened to the gold price. And Australian producers just continued to be the clear outperformers of any gold stocks around the world. So let's just take a quick look at that sector. So here's gold. You can see we had a bit of a move on Wednesday, but the really big move occurred on Friday into the end of the week. Now we've got some short-term support coming in here, which we're basically sitting on now. The next support level down, I think, really comes in on a bit of a Fibonacci retracement of this whole move that started back here on the 16th of August last year, and you can see that that comes in at 1276, which also corresponds with the bottom of this consolidation period that we had here in January. So I think that's the next logical support level for gold, around 1276. All right, other commodities, copper was up a little bit more to almost $3, and crude oil was, in fact, sorry, that should read, was down a little bit, down to 55.8. $55 is proving to be a pretty good pivot point for crude oil. And the momentum if you want to get into the actual stocks themselves, the biggest momentum at the moment is in the integrated majors, so ExxonMobil, Chevron, etc., and also the pipeline stocks did pretty well in the last week or so as well. There's the spot copper chart, so we've had quite a rebound, and we've certainly broken higher than we've seen in basically 6 months. And the copper inventory is staying down where it has been for quite some time. And there's the crude oil chart. We're just sort of bouncing around now between 55 and 57 at present. So just to wrap it up, I think we are overbought. A bit of a sharp sell-off is certainly a possibility. I don't think it's a strong possibility, but I think it's a possibility, and therefore it's probably prudent to hold a bit of cash. But what I'd really encourage you to do is to pre-plan how you would deal with sudden downward moves, because the biggest danger in the market is generally not the price movement themselves. If you own, decent quality stocks, the price movements just tend to sort themselves out over time. The biggest danger in the market is how we react to them. And if the more you pre-plan how you're going to deal with those moves, the better prepared you're going to be. And the less irrational choices you're going to make when that comes along. But if you've got no idea, if you're just making it up as you go along, then it's so easy to make those irrational decisions. They seem completely logical at the time, and they seem obvious. But when you get another week or two onwards, you look back and you think, how could I have made that decision? So the more you pre-plan, the better prepared you're going to be. Portfolio Analyst this week is really just a continuing search on my part, obviously answering questions from members, and we're getting a good stream of questions coming through. But from my perspective, it's really about seeking sound opportunities where the reward for risk is attractive. There's always an educational component to Portfolio Analyst. I think that's really important, and I'm just really seeking to keep everyone with a clear perspective on how to attack the market. So that's it for this week. There's my contact details for any members for any non-members that would like to communicate with me, and I'll be back with you next week. Cheers.